Hi, and welcome to Chapter 8, Insuring Your Life. Learning objectives are to explain the concept of risk and the basics of insurance underwriting, discuss the primary reason for life insurance, and identify those who need coverage. Calculate how much life insurance you need. Distinguish among the various types of life insurance policies and describe their advantages and disadvantages. Choose the best life insurance policy for your needs at the lowest cost. Become familiar with key features of life insurance policies. What's in it for me? How will it affect me? Insurance should be used only to protect against potentially catastrophic loss, not for small risk exposures. It should cover losses that could derail your family's future. Okay? For example, long-term disability that will completely derail you. So you should have long-term disability insurance. Many employers offer that it's payroll deducted. You don't the premiums come out of your paycheck before you get your paycheck. Of course, life insurance does that as well. And you can have short-term disability. Most employers provide short-term disability as part of their benefit package for full-time employees. Purpose of life insurance: replace loss of income if premature death occurs, providing funds so your loved ones can keep their home, maintain an acceptable lifestyle, pay for education, and meet other needs. Basic concept of insurance is risk. Risk is defined as uncertainty concerning a potential economic loss. The simplest way to deal with risk is to avoid the act that creates it. Risk avoidance: avoiding an act that what would create a risk. There is risk in everything financial: life, health, home, car, business, everything. Many life insurance policies will be voided if you go skydiving or take on other activities that are considered high risk. So before you go skydiving, make sure that doesn't void your life insurance policy. Okay, living with risk. Unless you live in a bubble, you have to assume risk. Risk assumptions: the choice to accept and bear the risk of loss. Loss control is any activity that lessens the severity of loss once it occurs. Wear a seatbelt, don't drink and drive, eat a healthy diet, no smoking. Okay? You transfer some of your risk of loss to insurance companies, but you cannot transfer 100% of risk. Your actions matter. Underwriting basics: insurance companies decide whom to insure and rate to be charged. Company must guard against adverse selection, a disproportionate number of bad risks. Because if you have a lot of bad risks and they all pay out, then you don't have enough money to do that, so the company goes bankrupt. The benefits of life insurance: financial protection for dependents, protection from creditors, tax benefits, because the proceeds from life insurance are generally not taxable, and vehicle for savings, though not the best vehicle. It really isn't a very good vehicle at all. Do you need life insurance? Yes, if dependents count on your financial support, you have debts such as home mortgage. No, if no one depends on your support, you are a child. Maybe yes for funeral costs and other end-of-life expenses. That would be about it. So once your kids are grown and gone and on their own and living their own life and supporting themselves, the only reason you'd have life insurance is just to pay for the funeral costs. Um, there's really no other need for it. How much do you need? Well, multiple of earnings. Multiply annual earnings by an arbitrary number. Rule of thumb is 5 to 10 times. And take home pay. It all depends on how old your kids are. Are they going to college? What's the cost of your house? Does your spouse rely on your income to pay for the bills? If so, how much of your income is needed to keep the bills, to pay the bills? And then go from there. Okay, how much life insurance needs analysis? Worksheet 8.1, which is in your chapter. Step 1, assess your family's total economic need. Step 2, determine what financial resources will be available after death. So if your children are minors, they'll receive Social Security survivors benefits until they're 18 or graduate high school. It used to be that you went through college, but not anymore. Now it's graduate high school, turn 18 or 19, and that's it. Okay, I believe it's still 18. So if you turn 18 during your senior year of high school, you collect until you're done high school. Um, if you were held back a year and you actually won't graduate till you're 19, when you turn 19, it stops even if you're still in high school. Okay. Step 3, amount of additional life insurance required to protect your family. What kind of policy? 90% plus of policies are one of three kinds: term life, whole life, universal life. Term life specifies the amount of insurance protection for a set period of time. Benefits paid if insured dies during that time. Otherwise, no benefits paid. Simplest type of insurance. It's also the cheapest insurance because it just covers the time that you're talking about. So if I take out a term life insurance for 1 year, I pay the cheapest premium that there is, and if I die within that year, it pays the beneficiary. If I don't die, then the premium's gone and you are no longer covered unless you take out another year of term life insurance. It's much like auto insurance as far as how it goes. You just make the payments, and unless there's an accident, there's no payout. There's straight term and decreasing term. Straight term, the payout remains constant, and the premiums can increase as you get older. Decreasing, the premiums remain the same while coverage decreases, used to pay off mortgages in case of death. So if you take out the decreasing term, it's usually to cover a loan. So decreasing term would be for a car loan or a mortgage or something like that. So if you die, the loan's paid in full, and your beneficiary or the heirs in your will get the property without any debt. Important features of term insurance: renewability, ability to renew policy without evidence of insurability; convertibility, convert to whole life policy without evidence of insurability. Representative renewable life term life annual premiums, non-smoker $100,000. So whatever age you are, gender you are, policy 1, 5, 10, 15, 20 years, and this is how much you'll be paying on an annual basis for the $100,000 life insurance policy. As you can see, when you get in your 60s, it's extremely expensive compared to 40s, compared to 25. 25 and 40, not much difference in premium because the risk is still low. But 60, the risk is very high. They don't even give a 20-year when you get to 60. 15 is long. Excuse me. 15 is as far as it goes out. Okay, term advantages: economical way for young families to purchase large amounts of life insurance, provide needs that disappear over time. Disadvantages: premiums become too costly as you get older, does not build any cash value, but it is the least expensive. The whole life insurance now provides insurance during an individual's entire life, permanent insurance. Cash value provides death protection plus a savings feature. Non-forfeiture right, value to cash value when canceled prior to death. So that means you have some value in its cash value after a certain amount of time. And cash value and death protection, as you can see, the cash value decreases as the death protection increases. Age of insurer depends on that. Okay. Then here's the premiums for that. Annual premium, male 25 is 1,057, female 956. And then you can see down here how much it is. Okay. This is the paid up 20 years, paid up. So after you've gone through it and you paid the premiums to, they actually start paying themselves and you no longer have to pay on it because of the cash value and the interest that it earns. So you can see how much money you're going to get back, but you also have to look at how much money you're paying out. Types of whole life policies are continuous premium, which is straight life. Level premium is paid until death or policy cancellation. Limited payment, level premiums paid for a specific number of years, for example, paid up to age 65. Insurance in force until death. Single premium, lifetime coverage purchased with a single premium. So if you come into a windfall, win the lottery, or you get money somehow, whatever it is, you could do a single premium lifetime coverage. So you just pay out one time, and it's enough money to cover all the premiums until it starts paying itself, and then that's it. So you have that life insurance until you die with the one premium. It's really good if you're young. It's not so good when you get up in your 60s or thereabouts, even 50s to a certain extent, because the premium is so expensive. Advantages of whole life savings vehicle: borrow against cash value, premiums remain constant, cash value accumulates tax-free until redeemed. And if you borrow against it, you have to pay it back, but there's no taxes involved. So that's the advantage of it. But you do have a fee that you have to pay. Okay, disadvantages of whole life: less death protection for young people, low return on savings, tax penalties on early withdrawal, outstanding loans subtracted from face value of policy upon death. So if you have $1 million policy and you had a cash value of 200,000 and you borrowed against it the whole 200,000, if you were to die before you paid it back, whatever you owed is subtracted from that million. And high premiums, as it showed. Okay, universal life is the last one. Permanent cash value insurance that combines term insurance with tax shelter savings. Provides death protection plus savings features. Premiums are unbundled into two accounts. Savings grow at current interest rate. Guaranteed minimum rate. Provide flexibility in premiums paid at death benefit. And then there's your premiums for that. You can see it's a little bit cheaper than the whole life. Variable life insurance provides death protection plus a savings or cash. Cash value can be invested in mutual funds for greater return. Return is not guaranteed, and actual death benefit can vary. So variable is kind of risky with that. And the premiums, as you can see, are very high. Okay. But you do have a guaranteed return with those, so that's a little bit better. Major advantages and disadvantages: type of life insurance policies: term, whole life, universal, and variable. Okay. And then other types of life insurance are group insurance. Usually term insurance offered through employers. Premiums usually lower than the individual purpose. Okay. And that is the end of this chapter.